Trading became 10 times easier after I started using these 5 things. And trust me, when I tell you that these 5 things will change your trading forever. Let's be real, trading used to be very easy, but sadly in today's economy, it's becoming more and more difficult for the average trader to actually see a breakthrough. So let me show you what I've been using lately to help you see your own breakthrough and how you can get to a 6-figure income in the next 12 months. 2023 is your year, and me and you both know that. Before we get started, if you guys want to be mentored by me, I do offer one-on-one mentorship. There should be a link in the description where you guys can book a call with me. And one last thing, if you guys could show some type of love, like this video, maybe even drop a comment below or subscribe if you aren't already. And hey, check out my channel. I actually have a lot of other videos based around US 30. So without further ado, let's not waste any more time. Let's get into my computer. Alright guys, let's get down to business. I just want to go over a couple of things with you that I find very important. These are things that have tremendously helped me in my trading for me to level up and really get to a level that I never imagined I would be at. So I hope that you guys stay till the end of this video and this information is valuable. So I think what's very important is understanding how risk works. A lot of us, we are just risking our whole account per trade. A lot of traders, when they go into the markets, they don't know what lot size to use. They don't know what percentages and how they shouldn't be risking their whole account. So the first thing that needs to be done is get your account size and determine the percentage you'll risk each trade. So if you have a $10,000 account and you're risking 1%, that is $100. So if you're trading US 30 and your stop loss is 1,000 pips and you use a 0.01 lot, you would lose $100, guys. So it's important that you guys understand, like, hey, how much do I want to be risking per trade? Do I want to risk 2%, 3%? And yeah, there might be different setups where you're more confident on other setups versus other setups. And that's very important. You need to understand that. And it's not even understanding, it's just taking account for your feelings that you're feeling when you are trading in the moment. Am I feeling confident? What are my levels of confidence? If I'm going to rate my levels of confidence from 1 to 10 on this trade, am I at 4? Am I at 6? Am I at 10? How am I feeling about this setup? And that's something that I've been doing. If I have these levels of confidence that are very high on a setup, I'm going to risk a little bit more. We all know what our perfect setup looks like. We all know what our dream girl, dream guy looks like. So take account of how you are feeling emotionally when you are looking at the markets. Are you confident or not confident? So you want to be knowing how much you're going to be risking. I would recommend risking 1 to 3% per trade. And obviously your reward is going to be around 2, 4%, 5%, around that range. So you need to figure out first what your stop loss will be on the trade. So let's say, I'm so sorry for the grammar, guys. I didn't proofread this. I know I should have proofread this title or this slide, but I didn't. Hopefully the other ones are better, but I'm telling you now. So you need to figure out what your stop loss will be on the trade. Maybe it'll be 500 pips, maybe it'll be 800, maybe it'll be 200 per trade. Then you want to figure out your lot size and how big your loss will be if that trade hits your stop loss with that lot size. So let's say I have a $10,000 account and I'm looking at a trade. It's a 500 pip stop loss is what I'm going to use. I could use like a 0.02. And if I'm risking 1%, let's say I want to stay around in the ballpark of 1%, cool. If my trade hits my stop loss of 500 pips on a 0.01 lot size, I'll just lose $50. So therefore, I can up my lot size a little bit because my stop loss is going to be closer. So overall, this is what you guys should get from this slide. If your stop loss is bigger, your lot size is going to be smaller. If your stop loss is smaller, your lot size is going to be bigger. Trading checklist. This is just something that I created. I did make a video, not the video previous to this one, but 2 videos back. I made a video going over the trading checklist. Check that video out, guys. It will help you out tremendously. So this is just a rough draft, but what I did on that video 2 videos ago is I made a trading checklist and I wrote down all the things that meet my criteria to make it a perfect setup. And let's say that I have 6 boxes like I did on mine, If all those 6 boxes are marked off, A plus trade, I'm risking 3%. If 4 of the boxes are marked off, then that's a B plus trade, I'm risking 2%. If 1 or 2 or 2, if 2 of the boxes are marked off, that's a C plus trade, I'm risking 1%. So here's an example. Maybe you like using the 20 EMA. If the 20 EMA is rejected, boom, cross that off. What about the RSI? If the RSI is crossing over the 70% or under the 30%, does that qualify for it to be in your setup? What about a doji, a shooting star, a spinning top is formed? What if you have all these things marked off? Would that be like an ideal perfect setup for you? So you need to really figure out, okay, what about my risk? And then you need to add that risk. And I was just talking about the levels of confidence. You need to have your trading checklist so you can write it down and be like, okay, I'm confident. All my things on my checklist are marked off. I'm feeling good about this trade. I'm going to risk 3%. I'm going to risk 2%, whatever it may be. But I want you guys to go and watch that video 2 videos back. Create your trading checklist. Super, super important. Record yourself when you trade. You guys are probably like, why do I need to record myself trading? Guys, you would be amazed with how much feedback you will get from recording yourself when you are trading. You want to be able to see what you're doing right and what you're doing wrong. We all have had those moments where we take a loss and we're like, why did I take that loss? So what did I do? So the level of, let's say the level of failure is going to go down once you can determine what you are doing wrong. So you want to be able to figure out what you're doing wrong and stop doing that immediately and figure out what you're doing right and do more of that. So when I record myself, I literally just go on Zoom and you can start your own personal meeting. So when you trade, just share your screen and record yourself trading. And obviously you're talking like as if you're in third person. So, hey, it's currently January 23rd, 2023. I'm trading US 30 today. And I'm going to start trading at 6:29 a.m. Once I see this minute 15 candle close, I'm going to look for my setup and see if I can take a trade. So you want to talk and really share, like, what's your point of view? Why are you taking the trade? Why is this a good trade? And not just are you recording it for you to have feedback and for you to look back in a couple months or a week or whatever it may be. You want to really hold yourself accountable. When you're having something that's being recorded, let's say that you're with somebody and they're recording you the whole time. You're probably going to act a lot different as if you were not being recorded. So really take that in the back of your mind and understand that when you're recording yourself, this is really helpful. A lot of the top athletes, they have their coaches record them. They want to see, okay, am I doing that punch right? MMA fighters. What about golfers? They're like, all right, what about my stance? Am I hitting right? What about my swing? They want to see that everything is done correctly. So if you could see that and you could catch yourself like, whoa, I was thinking that? Wait, I thought that? I took that trade? What was I thinking taking that trade right there? So you really, really want to get on yourself about this stuff, guys. It's important. And you're your own trading coach. So nobody else is going to sit there and be like, oh, there you go, Johnny, you're doing it wrong. Nah, no one's there for you. This is a solo game. Trading is a solo mission, baby. So you got to be on yourself. Focus on the psychology. Focus on the psychology of trading. Tongue twister right there. Buy books on trading psychology, guys. 2 books that I recommend that changed my life: The Daily Trading Coach and Trading in the Zone. You guys can buy those books off Amazon. I'll get the hardcover so you can highlight things, write notes, whatever it may be. Like I said a second ago, focus on being your own trading coach. No one's there for you. That's why I'm giving you all these tips, these tricks, so you guys can use them and actually hold yourself accountable. Remember, guys, that trading is 90% psychological and 10% technical. Now, I want to go over one more thing, and that's actually like reading the charts, and I'm going to give you guys an activity. One thing that really changed my trading, and I learned about this literally like 2 or 3 years ago. I used to never do this, guys, and I was like, what was I thinking? You can actually go and back test. You can trade in past time and get to understand why the market stays on, and overall just practice. So you do on TradingView have to have the pro plan at least. But the way that we do this is you go right here to a date. Let's go like right here to the 19th. And then once I get to that date, I'm going to click this replay bar, go right here. And then all I'm going to do is click this button right here to go forward. And I'm going to go forward to my desired time. I like 6:15, the 6:15 candle. And this is where you can use your trading checklist when you back test. So I'm looking at my trading checklist. I actually have it right here and I can pull it up. So this is my trading checklist I use, and it's nice because if you get this little checklist right here on a Google Doc, you can just go through and check it off. Go through, check it off. So I'm going to delete this. There we go. I can check it off. So I'm going to go through and I'm going to back test as if I'm in current time. So I'm going to skip this candle. I don't really like it. I'm going to go to the next one. All right, we got a bearish candle. So I can see right here my consolidation in Asia is broken. This is like a nice bearish candle. I wouldn't call it a bullish or bearish engulfing, but I'm going to give it a spinning top. These are smooth trending markets. So this is what I'm going to give it. I'm going to give it a C+. So I'm going to risk 1% of my account here. Oops. Let me go right here. I'm going to risk 1% of my account on this trade. So then what I'm going to do is grab my position. This is a hypothetical trade. This is not in real time. I'm going to go short, but this is what I'm telling you guys to back test. I'm going to have my stops, let's say like right up here above this wick. I'm going to have my TP right down here. And all I'm going to do is play it back. And you guys can record yourself back testing as well. Okay, currently in profit. And my TP was hit right there. Then what I'll do is I'll go and lock the position so I can go back and review it and be like, okay, well, how many pips I catch there? What about the next trade, and kind of tally it up and add them all up. But guys, these resources and tools that I gave you are game changing. They will definitely help you out. Apply them. Let me know what you guys think in the comments. If you have other video ideas, definitely comment them below. I'll see you guys on the next video. Peace on out.